Live Trader Showcase for December. It's the last one for the year. It's a quarterly event where we feature expert traders to bring you training and insights and techniques from 20 expert traders. We have prizes that we're giving away thanks to our wonderful speakers. Surprise interviews. We're calling them hot take interviews. I think you're going to love that. Please check out tradersexclusive.com where we regularly post articles and video clips with valuable trading tips and techniques. And that's also where you're going to find recordings. Yes, we are recording. Before we get started, I need to share our quick disclaimer. Of course, you know this, but it's required that we say it out loud. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not necessarily indicative of future results.
What should a new trader focus on as they get started? That's another simple one. The KISS approach. Excuse me. Keep it simple, for goodness sakes. Keep it simple. You know, there's all kinds of indicators. There's all kinds of charts out there. There's all sorts of things you can do to a chart to complicate a chart. And there's 101 things that you can do that just makes confusion. And what it ends up doing, and it makes you second guess your trade. Honestly, all I trade with, and I'm quite successful, okay? What we focus on is doubling our account, whether it's a $5,000 account or a $40,000 account, doubling it in 12 months. And we simply follow the trend, candlesticks, a few proven setups, and we learn to accept losses, small losses. Now, we have to accept the bigger ones, but we don't like those. Keep the losses small and accept them.
I often get the question from new traders what they should focus on as new traders. And I think the most valuable thing to focus on is creating a good plan for trading. The last thing, in my opinion, that somebody wants to do is jump into the markets because they've got money to trade. Having a plan means making sure that you know what your trading goals are before you even start trading. You select a style that meets and matches your personality. You choose markets that you're interested in, comfortable with. You develop entry and exit strategies using indicators and tools that are proven. That's one of the most important pieces. You manage your risk. You know exactly how much you're willing to put towards trading, how much you're willing to put into a single trade, and if you lose money, how much are you willing to lose before it's time to exit that trade. Keep good records, backtest what you're doing, refine, review, and refine again. At the end of the day, the best thing for a new trader to do is have and create a plan.
And I also have one more for you, and then we're going to get started. Let's see. This one is awesome.
Hi, this is Dan Passarelli. Do I have any trader mindset tips to share? And the answer is yes. It's really important to be in the right mindset when you're trading. And everyone handles it a little bit of a different way. Some people will meditate. Some people will have some internal dialogue with themselves beforehand, maybe a self-pep talk. Some people will just get into what they call the zone. But what these things all come down to are a few things. One is a positive attitude, and not a positive attitude saying, oh, I know I'm going to win on this trade, but focusing on the things that you can control. A positive attitude that, yes, I understand trading, I might make money, I might lose money, but here's where I have an edge, and here's what my trading plan is going to be. That's really the clearest mindset. And in order to do that, we can do things like, again, having that internal dialogue, saying, okay, before I make this trade, what are some of the things that I need to focus on? What are my steps? And does this trade actually meet that criteria? Just go through your process. And, some of the best traders that I know, in fact, all of the best traders that I know, or at least all of the traders that I know who have ever been successful, they actually tend to be fairly humble people, to have a lot of humility. And why? Because the market always has that ability to knock you down a peg, and just respecting the market and how it's really not necessarily man versus market, but man versus man versus himself. That is the power to having the right mindset in trading. Hope that helps. Dan Passarelli, Trade Smart.
And all profits are good. I think that's a great mindset to have. All profits are good. And you don't have to hit home runs to be a trader, a successful trader. When I do coaching with people, one thing I learn, not from everybody, not everyone's the same, but one thing I learn from a lot of people is, they're looking for these 100% gains because they think that's what they have to have. The truth is, I rarely have 100% gains. Rarely. The truth is, if I have 100% gain and I tell you 100% gain, I would ask me to prove it to you. That's how rare I have 100% gains. And I love the concept of doubling your money. So, but you don't need to do that with 100% gains. So I'm all about taking profits into strength. And so the biggest mindset is simply you just do not have to have those monstrous gains to make money in the market. And in fact, I think if you don't have the education, the technique, if you don't have the time under your belt, you're just not. It's just not going to happen, and you're going to spin your wheels trying to get there, and you're just going to keep crashing the plane, and the plane can only crash so many times, and then you're done trading. So, yeah, that would be the thing right there.
So today we have John Thomas, Norman Hallett, Marina Villatoro, Melissa Armo, Jeff Tompkins, Jason Allen Jankovsky, and Rick Sadler. I want to tell you about our sponsors for December: Market Taker Mentoring, Hit and Run Candlesticks, Vantage Point Software, and Mumu. We really appreciate their sponsorship. I want to introduce Jason Allen Jankovsky of Net Winning Trader. I think he's got a new project that he is working on that is super exciting. Jason Allen Jankovsky is a 35-plus year veteran of leverage transaction trading extensively in futures, options, and Forex since 1986. First as a customer and then as a registered broker, he is self-taught and self-educated. He has focused on the psychology of trading as the key component to a successful trading methodology. He has published 4 books on the issue of being better trading, and trades his own accounts every day. He's a sailor, private pilot, and occasionally gets in the cockpit of a Formula Ford racing car. Ooh, that's exciting. Now, I know for a fact that GoToWebinar has made some changes on my settings. It says attendee is muted by an organizer. How about if I try to unmute you? Can you speak now?
I don't know. Can you hear me okay?
Yes, I can hear you. Can everybody hear Jason Allen all right?
We good?
Yeah, I'm going to make you the panelist now. Do you like the questions on the fly? I'm going to make you the presenter. Do you like them on the fly or do you like them at the end?
Well, the thing is, I'm not probably going to see them
Okay.
if you put them in the chat. So if someone could interrupt me, if you want to just jump in real quick and say we have a question, you could do that, or we can wait till the end.
All right, I'm going to make it so you could potentially see them, but because what you have to do is you have to pop the little questions box out so you can see who's asking questions. And then what I usually do when I pop it out, I will hit the received column and make the little arrow point up. And then you see the most recent chat at the top. But you have both, we can do it both ways. So I will be keeping an ear out. I will step away from the keyboard here for a few minutes.
Thank you, everybody, for coming. I think you might be surprised at where I take some of these insights and our conversation today. I would encourage you that if you're not making money consistently, and by consistently, I mean all the time. If you're not making money every week, every month, every year, year in and year out, then obviously there's something you're missing. I bet I know what that is because I've been trading for almost 40 years now, and I can tell you with absolute certainty, there's absolutely nothing that you're experiencing that I haven't experienced 100 different ways from Sunday at least once. And the reason I tell you that is because I want you to really accept this. I'm a real guy, a real trader. I trade my own money every day. And I'm living here in Bradenton, Florida, a little bedroom community in between Tampa and Sarasota. And I'm a real guy. And I really do know what can make a difference for you. And I've got a lot of material for you that can help you. But what I need you to do today is open your mind up to something that you're probably not really willing to consider at first blush. And that's going to be scary. So what I need you to do is take a deep breath, take a step back, open your mind up to something you probably hadn't considered before. And then let's decide if we have something to work with. So that being said, let's get to work. Trading in futures, options, and off-exchange foreign currencies, that's Forex, involves risk of loss. It may not be suitable for all investors. What I need you to do is just carefully consider if trading in futures, options, or Forex is really right for you in light of your circumstances, knowledge, financial resources, tolerance for risk. People can and do lose money. In some rare cases, might lose more than they invest. Everything we talk about here is considered opinion. Market data, trade discussion, it's all subject to change at any time. And I said all that to say this. I think now the regulators are happy. We can get to work finding out what our issues are. So I wanted to tell you just a little bit about me before we get to the 5 factors that are really causing your problem. The reason I wanted to share this with you is because, what I'm going to say next, because of the time and experience I've had, could be considered heavily vetted. What I want you to understand when I say I'm a real person is, I started just like you. I wasn't always a net winning trader, surprise, right? I started as a customer, just like you. I opened an account, did my very first trade in Chicago Board of Trade, big board corn in 1986, and was absolutely hooked. I didn't understand what the difference was between going long and going short till later. And when I found out you could make money no matter which way the market went, boy, that was it. I knew that's what I wanted to do. And I decided to become a Series 3 registered commodity broker. And I endured a process of pain that I think anybody who's ever been on this side of the telephone and had to get on the phone and find clients and then learn to trade and all the rest, unless you've done that, you probably really haven't been exposed to everything that can take money out of your pocket. Because trying to juggle 100 balls in the air at the same time you're trying to learn how to trade, almost impossible to do. And what I went through almost killed me, really. And I had to discover something about the markets. Otherwise, I was never going to win. And I talk about this in my book, The Art of the Trade, which some of you may have read. And what I learned was in the process is that there is no secret. And I know what a lot of you people are thinking. I know, because I know everything that goes on in your head. That you're thinking that there's something I haven't quite found yet. There's that something I'm missing. And in reality, there isn't anything you're missing, and there is no secret. And the more you go looking for it, the harder it's going to be for you to win. I believe there's nothing at all very complicated to trading. I don't believe it's a difficult thing to do. A lot of people think it's hard to do, but it's not. There's a lot of misconceptions most people have about winning at trading, and I'm going to clear a lot of that up for you today. And I've got some very powerful tools that I want to share with you too. I think you'll be surprised to find out that the way you see things This is why you're losing. Has nothing to do with the market. The markets themselves actually are almost incidental. It doesn't matter. Market could be anything you could think of. Doesn't matter what it is. They all function the same way. And the market itself doesn't really have anything to do with why you're not winning. And that's probably a new concept to most people. Once I share with you some of the tools that I have learned to apply for myself, I think your results will improve significantly in a very short period of time. I actually do a full course on the psychology of trading. It's around 8 to 10 weeks long, depending on the student. And I do it over the web, full time, unlimited, deep diving, deep immersion, graduate level course on the psychology of trading. And I've had guys take that course, and in just a short period of time, something clicks in their head, and they go from losing trader to winning trader instantly. I mean, like overnight, from Monday to Friday, done, and they're never looking back. I'm not saying that to brag. What I'm saying is that the answer that you're looking for is out there. You just don't know where it is. You ever heard that expression? We don't know what we don't know. You don't know what you don't know, right? So let's talk about that, because I want you to understand what you're really up against. And this is not opinion, guys. The odds are against you. You're not going to win at this. This is not opinion. The odds are stacked against you. The probability of you making money in this business, almost non-existent. Over 85% of traders lose. Right around 80 to 85% across all markets, all points in time, lose. That means they open a trading account, do at least one trade in futures, options, or Forex, warrants, or equities, and close out that account. They've lost money, 80 to 85% or more, depending on the market. Now, how are you going to beat those odds? And don't tell me you're going to do something different, because you're not. You're using the exact same tools, the exact same toolbox that everybody else is using. So how are you gonna beat the odds of everybody losing at this if you're doing the same thing everybody else is doing? Seriously. Have you asked yourself that question? Now, I paid a real high price to know what I know today. And some people are going to pay that price too. You may not, and that depends on whether or not you're willing to be one of those people that have understood and learned how to learn from the mistakes of others. The price I paid to get where I am today, which is a net winning trader, I paid a real high price this, okay? I went through years of net losses and debits, and I mean years, some of the best years of my life, my 20s and 30s, never made a dime. Bankruptcy, loss of credit, no bank, I couldn't get a bank account at one point. One step from homelessness for years at a time, living in the most godforsaken flea bag places you could imagine in downtown or near North Chicago, getting up every day and putting a tie on and pretending that I knew what I was doing, walking through downtown like every other guy with a tie on. I owed back taxes constantly, never had a social life. I didn't have any money. How was I going to have a social life? No vacations. It was horrible. Every dime I made when I had an income, it went right into learning more about the markets, because I bought the same BS lie you bought, which is the more I learn, the more I study, and the more I get to know this business, the better I'm going to be. And that is a flat out lie. But you don't know that, because you don't know what you don't know. And one day, something happened. And I almost didn't sleep for 3 days. I experienced what people call an epiphany, where I had, it's like imagine somebody hitting you in the head with a baseball bat, but in a good way. And all of a sudden, all of that stuff that was untouchable, unreachable, unknowable became crystal clear. So clear, you can almost taste it. I discovered something about the markets that made all the pain and all the suffering worth it. Like most people listening, I bought into that lie about study and analysis and education and systems and training and weekend retreats and all that kind of stuff. What I discovered is what all the winning traders already know. There is no secret. I learned the essential difference between net winning traders and net losing traders, and I'm going to show you the difference between those. And it's really simple stuff, but you don't know it's there. That's the problem. So I want to start right here with one, because I want to introduce you to a few guys that are going to make a really big difference to you, right? Anybody up here know what this is? Can anybody seen this before by any chance, or anybody want to offer an insight as to what we're looking at here? It's a beautiful picture, isn't it? Let's see, a couple of guys say here, no, never saw it. Jeff says, it looks like a Japanese market. Tom says, something in China, something in Asia, something in Japan. Yeah, that's pretty close. It is, actually. It's a painting of the Osaka rice market in Japan, right around the time of our first trader that we want to discuss. And here's an interesting thing here. And I want to talk about something. This isn't new. It's just forgotten. And not forgotten maybe is the wrong word. Maybe the better word is ignored by almost everyone. But I want to ask you if you've ever heard of this person. Does anybody know the name Monisha Homa? Anybody heard that name before? A couple of yeses coming in, a couple of no's coming in, a couple of no's, more no's, one yes, no. Okay. Monisha Homa is a trader that lived right around, well, he was in the he traded the rice market in Japan in the 1700s. And he amassed a fortune that today would be somewhere north of about 10 billion. In other words, he's probably the most successful trader that's ever been, other than maybe one or two other guys. He wrote the first book on trading psychology called The Fountain of Gold. And that was written, before most of us even knew where Japan was. And he's considered the inventor of Japanese candlestick charting, but that wasn't his intention. He didn't intend to invent a system of analyzing the markets. And that's the biggest misconception that people have about who Monisha Homa is. Japanese candlestick charting is not what you think it is. It's not supposed to be a method of analyzing the markets. It's supposed to be a method of helping you understand the psychology behind price action. Let me just share this with you real quick. Here's what he said. You must be willing to go against the crowd. Now, what does that mean? You must be willing to think differently. What does that mean? You ever heard any of this before? You must not listen to common knowledge or the crowd. It is the thinking behind the tool, not the tool itself, that is the key to profit. If the only tool you had in your toolbox was a hammer, you would tend to see everything in the world around you as some form of a nail. But pounding a nail is not necessarily the same thing for everybody all the time, and it's not the only tool you're going to need to use if you intend to live a well-rounded life as a carpenter. You're going to need other things. See, my point is, if you don't really understand what you're doing and the why and behind why you're doing it and the what it is you're trying to accomplish, you're going to try to do something that you're not qualified to do, and you're not going to know why you're not qualified. So what happened since the late 1700s when Monisha Hama introduced the world to, quote, candlestick charting, which wasn't his intention. Somebody else took that and ran with it. What happened? Well, I'll tell you what. Here's basically what happened. Major focus on technical analysis and math. And why is that? Because science is assumed to be the best choice for getting answers. This is a social construct. The time the trading developed into the financial environment that it is coincided with growth in other areas of our culture, like the Industrial Revolution and other methods of thought and transportation and electronics and computers. And all of this is based on some understanding that 2 + 2 = 4 all the time. And because our entire environment that we've been born into and grown up in and learned to understand and love and teach and have spent time in is all factored and based on something called mathematics, we all think that that's just a natural outgrowth then into the marketplace, and that's completely false. The creation of countless indicators, oscillators, prognosticators, artificial intelligence, machine learning, charting methods, whatever you want to call it, whatever that is, all of that, none of that has anything to do with making money. Why have things become so distorted in terms of math versus psychology? Well-meaning people, marketers, maybe some of them you've been listening to recently, they're all selling what they believe will answer the question of where to buy and sell for profits. Some of them do it ignorantly. Other people, and I'll be happy to name names if someone would like to ask, because I know everybody in this business, I can tell you that there are people out there that will sell you what you want to hear for as much money as they can get from you, and they don't give a flying fetch about your success in the markets. Now, why would you trust that guy? But you know who he is? Probably don't know who he is, do you? But you're willing to spend money on his indicators, oscillators, instructions. Here's why you buy or sell. Here's the signals. Don't forget to wait for confirmation. Blah, blah, blah. Is any of this working? Let's be honest. How much money have any of you people made? I don't mean the guy sitting next to you. I mean you. How long have you been trading? And have you really earned 100 or 150% a year, every year, year in and year out? And if the answer is no, why do you think that is? So I've been struggling up to this point, trying everything, and it's just not working. It's not your fault. It's not your fault. You just don't know any better. You're simply unaware of something else. You don't know the true state of the environment you're in. You've been told something, but it's not necessarily accurate, and you wouldn't know that. So what do you need? You need a paradigm shift in the way you function. Now, who's the greatest trader that's ever lived? Anybody else want to offer an insight into that, maybe? Any ideas of who that might be? That's assuming I still have people listening. Jeff says, Livermore. Right, that's the man. That's it. Jesse Livermore. We all can bow our heads for a moment in silent appreciation and worship of the man, the only guy that ever said everything that matters in this field. If you don't know who Livermore is, you want to stop listening right now, turn off everything you're doing, close out every account you have, go get a copy of Reminiscences of a Stock Operator and read it. Then decide if you want to continue doing this. Livermore made more money doing this than anybody else in history except for Monishi Homa relative to the dollars. He made $100 million in one day, back when $100 million was a lot of money. And he did it before the invention of computers, artificial intelligence, oscillators, indicators, prognosticators. Rode a horse to work. Didn't bet you didn't know that, did you? He was born in the 1880s. Made his first million when he was 18 years old. Well, maybe 21, excuse me. I get a little excited when I talk about Jesse. I would read Reminiscences of a Stock Operator if I were you. It's the only book really you need in this business, in my opinion. Here's a quote from him. There's no bull or bear side to the market. There's only the right side. Here's another one. Prices move along the line of least resistance. What does that mean? Livermore was quoted as saying more than once that he considered chartists, you know, people doing what you're doing. People are doing what almost everybody does. He considered chartists as freaks or pet monkeys employed by brokerage houses, only because he never met anyone making money who used them. Only the opposite. Chartists were all losing all the time. Sound familiar? Livermore, like Homa, understood that trading is about people, not patterns or prices or numbers or anything else for that matter. It's about people. See, the markets are not prices. The markets are people arguing about prices. That's why they put their orders in. That's too high. That's too low. Based on what? Based on what they think. Why are they thinking what they're thinking? How can two reasonably intelligent people look at the same information and come to two opposite yet equal conclusions? The chart of the Board of Trade's Chicago Board of Trade soybeans looks the same on my screen as it does on yours. Every open, high, low, close is the same. If I put up stochastics, it's going to look just like your stochastics. If I use Andrew's pitchfork or Elliott wave or parabolics, it's all going to look the same on my screen as it does on yours. I have access to the dates when all the reports are going to be released, same as you do. It's all the same reports. It's the problem of shared data. So we all have a look at the same information all the time. How come I decide it's time to buy on Friday morning and you decide it's time to sell? Well, by the time the day is over, only one of us is going to have a profit. And guess who earned that profit? Where'd that money come from? The other side, the loser. The loser pays the winner. It's a zero-sum transaction. That's what that means. Livermore and Homa both understood that. They know that the thing they got to do is figure out where's the other guy trading and why. What side is he on? Because I need to take the other side of that. That's how the money's made. If that guy wants to chart the markets and prognosticate and put little dots and ratios and lines and curly cues on a piece of paper and then run that through some Air Force surplus Cray supercomputer and decide whether or not it's time for the markets to go higher or lower, fine, let him do that. Because once he puts his order in, he's done. If I can take the other side of that order, I'll win, he'll lose, his money becomes my money. That's how they think. If you're not thinking like that, that's why you're losing. The problem is called market mystification. People who educate traders, just for the most part, have completely lost sight of what professional winning traders know and what they do. They have completely lost sight of that. What does a winning trader do? He takes the other side of a losing trader's trade. That's what he does. Traders today have fallen for a complete misconception of how and what is required to win. That's why you're losing. Endless study, charting, analysis, calculations, projections, that's all based on some mathematical computation. That leads to loss. Not a single winning trader puts their confidence in these methods. And I'm telling you that as a fact. If you can find a winning trader, and I mean really find one, not someone who talks about being a winner, but someone who's literally making money every week, week in and week out, day after day, month after month, year after year, you can find that guy. He probably isn't going to really want to talk to you because you know what? He doesn't have to. He doesn't really need to share with anything with you. He doesn't need to tell you anything. The last thing he wants is for you to know what he knows, because once you know what he knows, he's got to share all the money with you. So most winning traders don't really talk about what they do. But let's suppose you could find one. Do you really think he's charting the markets? Nope, not in the least. His entire concern, the only thing on his mind is if everybody's buying, where do I sell? If everybody's selling, where can I buy? That's what he's thinking, because he knows the loser is there 80 to 85% of the time. And it's because of these things, the typical trader has little to no potential to create gains. You don't have any potential to win. It's not mathematically possible. It falls outside the bell curve of random distribution. Go look it up. It's not my opinion. It's mathematical fact. We want to demystify the markets. There's no miracle here. There's no mystification to it. And before I actually experienced my epiphany and understanding, I had a potentially life-changing experience, but I didn't make the connection at the time. Why? Because I was too caught up in the BS in my head. But this is it. This is everything. If you were to stop right here after you hear this, never listen to another broadcast by anyone ever again, and try to figure out what this means, you'll be light years ahead of your competition. I met a wheat pit trader. This is back when they still had pits in Chicago. I lived and worked in downtown Chicago. I was in the markets every day. He told me what the secret to trading really was. And this man was like me, traded every day, looking to make his fortune, but he traded in the wheat pit. And here's what he told me. When everyone is buying, look for a place to sell. When everyone is selling, look for a place to buy. That's not it. There's no mystery to it. What's the simple solution? You just have to find the market's weak spot and put your position on. That's the weak spot. When everybody's buying, it's time to sell. To find the weak spot, you just have to know what to look for, really. Now, next, if you know how to manage your trade, you can be profitable regularly. And by manage your trade, I mean what to look for in holding your positions. I'm going to show you some simple steps that we teach at netwinningtrader.com to help you with that right now. So let's get to it. Now, remember, you have to think different and do different things if you want to have a different result. One of the worst problems people have in this world is they keep doing the same thing over and over and over, expecting different results. And one of my favorite quotes, which hit me like a ton of bricks, just like everything else does when it really comes into my head, is from The Mandalorian. Some of those of you out there might be fans of the George Lucas space opera. And Mando was told this by one of his coaches: persistence without insight will lead to the same outcome. Persistence without insight will lead to the same outcome. If you're doing the same thing over and over and over again, thinking you're getting better and better and better, but you're getting the same results, that should be the clue. That's the definition of insanity, is expecting different results when doing the same things. So let's start at the foundation here. Losses create pain. The typical average trader is losing, and this is painful, right? It's painful. Tell me it's not painful. It's painful. The market is a pain amplifier. The loser is in pain. To avoid pain becomes the goal of the loser. Therefore, this trader will use everything and anything he can possibly think of to lessen the pain he feels from losing. That's why they spend all their time studying, researching, analyzing, and doing all that. It's because they think they can reduce the risk, which will reduce the pain. The pain avoidance process is the same for every losing trader. Therefore, all losing traders, they all do the same thing almost all the time, creating a weak spot in the market regularly. Happens like clockwork. I could tell you, we could spend hours talking about things like the first 30 minutes to 45 minutes after a news report. Why the market close after a failure at support or resistance tells you more than anything else in the market. What is it about the psychology behind that that you need to know? It's because it tells you where the loser is. And by focusing on those weak spots, we create opportunity out of someone else's losses, meaning their pain becomes our profit. And this is the profit paradox too, which is really interesting, is that wrong focus on what to focus on to win. Losing traders attempt to reduce their pain by increasing their number of winning trades. And their goal is to get, 55, 60, 65% winning trades or more. I'm sure you've seen things advertised that say, we have an 85% winning trade ratio, right? This is not likely under most circumstances to begin with, and the probability of maintaining these high win percentages, is also statistically unlikely. It's not that you can't do it, but if you could do 60 to 65% winning trades like I know how to do and other people know how to do, it's not because of your analysis or your understanding of the market. It's because you understand who's playing the game and how you play the game. But throw that out. Throw it out. You're trying to get the 50, 60, 70% winners. Why is that a bad thing? Well, basically right here. For those of you that don't know who William Eckhart is, William Eckhart is a turtle. He's one of the guys that was taught by Richard Dennis. For those of you that don't know who the turtles are, another thing you need to look up and really understand. Richard Dennis was a Chicago-based trader who took 27 guys with no knowledge, guys off the street, and taught them how to trade. Most of them went on to make hundreds of millions of dollars. A few are still in the business. Most have retired. Handful got clocked and are going back to being bicycle repairmen or surfers. But the desire to maximize the number of winning trades or minimize the number of losing trades works against the trader. The success rate of trades is the least important performance statistic and may even be inversely related to performance. In other words, if you try to get a high number of winning trades, you're focusing on the wrong thing. Let me show you something that will astound you. And when I say astound you, if you're paying attention right now, this is going to change your world. So please pay attention. How many out there have heard of the trading clearing firm in foreign exchange called FXCM? Anybody heard of them? Maybe some of you guys trade there. You ever heard of FXCM? A couple of yeses coming in. Good. Okay. All right. This chart is from FXCM. And this is a summation total of one analytic that they monitored for 1 year of their customer accounts. They took all their customer accounts and went back over thousands and thousands and thousands, tens of thousands of accounts. And this represents a little more than 12 million trades, not like $5,000 and $10,000 trades, but also 150, 250, 10 million, $20 million positions. Of all the people trading at FXCM, over 12 million trades over a 1 year period of time. This is how they did in the major pairs, right? Euro, pounds, pound yen, euro yen, some of the cross rates, euro yen, euro Swiss, Aussie dollar, right? The green bar is winning number of trades and the red bars are losing number of trades. And you can see, for the most part, across every major pair, their customers had more winning trades than losing trades in every market that they traded. Pretty spectacular, right? Wrong. Look at this number. Pips won versus pips lost on those very same trades. In other words, if you look at, yeah, they had 70% winning trades in Euro Swiss, but in Euro Swiss, they lost twice as many pips per trade as they won per trade. So you look at all the trades that they did across 12 million executions in every major pair, on average, they had more winning trades than losing trades, but lost twice as many pips on the losers as they won on the winners. Think about that. For every dollar they made on a winner, they lost $2 on a loser. Statistically, you would need 90% winning trades to make that relationship work. Not going to happen. What does that tell you? It's not about how many percentage winners you've got. It's about holding your winners. The win-loss ratio is what you want to focus on. You have to take more money out of your winners than you lose on your losers. And in the data I just showed you, what do these losing traders have? They have it the other way around. They're losing twice as much money on their losing trades than they win back on their winners. So even though they're winning at a high percent level, these traders can't pay for their losses, and you can't either. And here's another thing from William Eckhart, one of the turtles. One common adage that is completely wrong-headed is you don't go broke. You can't go broke taking profits. That's precisely why many traders do go broke. Amateurs go broke by taking large losses. Professionals go broke by taking small profit. Hold your winners. You need to have a method for this simple thing. Hold your winning trades. Otherwise, you can't pay for your losses. Livermore, after making and losing millions of dollars, I want to tell you this, it was never my trading that made the big money for me. It was my sitting. Got that? My sitting tight. He put a position on knowing full well that coming down the road, he'd have to sit through a rally against his short position that would cost $1 million or $2 million or $3 million in open trade gain, and he would just sit on it, knowing that the other side of that million, $2 million or $3 million loss, we're going to have fresh lows in this bear market, and that trade's going to be worth 30 or 40 million. He knew that. We teach methods for holding winners that are considered unconventional. Things like turn off the screen and go for a walk. You're in a winter, turn it off, go for a walk. Go on vacation. Take 3 days and drive to Omaha. Come back later. Doesn't matter what it is, you got to develop and maintain the skill, or you can't benefit from your system's probabilities. Most people don't even know what their probabilities are, but assuming you knew what they were, the only way to benefit from them so they'll drop to the bottom line is spendable cash, is if you learn to hold your winners. You got to operate on a higher time frame. Net winning traders know that it takes significant amount of time for all market participants to reach liquidating conclusions. How do we make money as winners? We got to sit out, wait out the loser. The loser's going to quit before we do. When he does, he pays us. So we got to sit through the trade longer than the loser will. Now, what's the average market participant being taught across all this stuff you've been learning? You've been taught to do what? Watch the 1 minute, 2 minute, 3 minute, 5 minute, 7 minute, 10 minute, 15 minute, 30 minute at the most. Risk a few points and get out right away. But don't forget, got to wait for confirmation too, which is ridiculous. So what ends up happening? You're in and out during random noise. Hopefully you've made a gain. But let's say you get a position on, as soon as you get your fill back, all of a sudden it's $350 against you and you freeze, you don't know what to do. You decide to wait for it to come back. And now it's 700, then it's 1,000, then it's 2,000. You finally quit because the pain's too great. That's the turn. Well, the guy that took the other side of that trade was waiting for you to do that. And he knows how you think and he knows how you play. So he knows what to look for in the market. He knows what that looks like in the market. I use this illustration in my coursework. I say, you take a guy who's a trained brain surgeon and you tell him to look at brain scans, and you put 3 brain scans in front of this guy. If you looked at all 3 of these brain scans, you'd go, I have no idea what this is, because you don't know what to look for. But a trained neurosurgeon does, and he looks at these 3 different brain scans and he says, this person is suffering from Alzheimer's, this person has schizophrenia, and the third one, that's a normal guy. You and I look at it and go, oh, I don't see a difference. Right. So if you're a trained trader who knows what to look for, you can look at a chart of the market and say, that market is confident, that market's confused, that market's about ready to turn. Wouldn't you want to know that? So you'd be able to do what? How to wait out the loser. See, winning traders know they can't get paid unless the losing trader takes a loss. So it takes time for the loser to decide to take that loss he's typically holding. That takes a longer time frame. Typical losing traders are operating on time frames of less than 30 minutes. Typical winning traders are operating on time frames of 60 minutes or more. Like 60 minutes, 2 hour, 3 hour, 4 hour, daily, weekly, monthly. And they're willing to sit for days or weeks on positions until the loser finally cashes out. You want to add the winning trades. Nothing will help you reach your goals and top level performance faster than a commitment to add when holding winning positions. 100% of all winning traders have a method which they use to add to winning trades. If you're on the right side of the market movement, the right side of the order flow driving prices, you need to add to that position. Livermore again. When I'm bearish, I sell a stock. Each sale must be at a lower level than the previous sale. When I'm buying, the reverse is true. I must buy on a rising scale. I don't buy long stock on a scale down, and I don't sell on a scale up. You see what I'm saying? He buys on a scale up and he sells on a scale down. In other words, if you're on the right side, stay with it, add to it. Record keeping. Trading is a business. You need to treat it like a business. Keep good records of your participation. If you ran a shoe store and I said, how's business? Let me see how well you're doing. And you handed me a copy of your checkbook, I go, well, this doesn't tell me anything. You know, what shoes sell the best? What days are your highest grossing days? I mean, when you run an ad, which ad works? You know what I'm saying? running a business is running a business. What are the things that you need to know about your business of trading that'll help you improve your performance? Got to treat it like a business. Most traders are not keeping records that can be used to improve their results. They keep the sort of records that make them feel good about what they're doing. Things like percent wins, largest gains, things like that. They're not really keeping the records that will help them improve two things. You need to improve two things to win. That's it. Two things. Here's the two things. Holding your winners, improving your win-loss ratio. That's it. I got to learn how to hold my winners so that I make more money on my winners than I give back on my losers. Otherwise, I can't win. No other piece of information is needed. So to summarize real quick before we get to Q&A, because we're going to run out of time if we don't, winning at trading is really a simple proposition. All you really need to do is follow in the footsteps of this ignored or forgotten timeless wisdom. 1, focus on win-loss and not your win percentage. Hold your winners. Operate on higher time frames. Add to your winners. Properly document what you're doing. And the program I offer at Net Winning Trader is a way to learn how to do that for you. It's tools to help you create a winning method. And I provide you a lot of stuff too, actually. So let's talk about cake. Anybody want a little slice of cake? It's real simple. My mother told me that if I could read, I could cook, which is basically true because I wanted to learn how to cook. And that's really all there is to cooking is you simply read the recipe, do what the recipe said, and you can bake a cake. Trading to win, it's like baking a cake. There's a recipe you have to follow. If you follow the recipe, you end up with a cake. You don't follow the recipe, you get something else. To win at trading, follow the recipe all winning traders follow. There's no mystery to it. You can flip that switch tomorrow morning if you wanted to. All right, so in conclusion, now you know how to become a net winning trader. Focus on something else. Quit worrying about what the price is going to do. Who cares? Doesn't matter, right? Right now, the floor is open for Q&A, so let's talk about that real quick. Here's my website, netwinningtrader.com. Here's the discount code. I didn't tell you what it is. Go there and find out. Tell me if you think that's worth your time. And if you're still skeptical, great. Here's the best $10 you'll ever spend in this business is get a copy of my latest book on Kindle at Amazon. You can also get it at Apple iBooks and all the rest. It's called The Psychology of Trading. And I'm going to go ahead and put it in right here. There's the link. So all you guys can get it. I send to all. You should have it in there. We can talk about some comments or questions. If you have a few, feel free, guys. What would you like to know more about? Mansuka, is that right? Mansuka says, add to winning trades. Would you add on a pullback? Of course. Absolutely, you'd add on a pullback. Now, you have to define what a pullback is, and you have to define what it is that will make a pullback more reliable for adding, so you're not in too early. When you add, it's better to add after the pullback as the market's resuming trend. If you're really aggressive, you add the instant you can on the pullback, but typically, let's say you're short from above the market comes down, has a rally, stalls, starts to go off again, that's the safest place to add to your short because you don't know how far that rally is going to go. So it's better to wait for the market to stall on the rally, put 2 or 3 or 4 bars in where it's starting to go sideways to lower, then let them have more. But then again, see, that's the thing that doesn't really matter. If you want to do it, here's the thing I teach in the coursework, okay? It doesn't matter what it is that you feel gives you the edge. It doesn't matter if you think, selling a rally in a down market gives you the edge to add to your short. Great. Whatever it is, as long as you do it consistently and document it, now we can know what the probabilities are of whether or not that will help you. If you can get something that gives you 53, 54% better chance of being in the right spot than not, that's about as good as it gets. So you want to now press that advantage. So if you add to your winners and you do it pretty close to the best time to do it, and you're right 53% of the time, the amount of money you're going to make on the probabilities as those drop to the bottom line is staggering. It's going to be 3 or 4 times the money you would normally make. But as long as you're doing it consistently and documenting what you're doing so you know what that consistency involves, you have a better chance. All right, let's see what we got here. Christopher says, I'm lucky. My father was a CBOT pit trader. Gotten to trade with him every day since. I started trading 5 years ago. He has a lot of pit sayings from the time. One of my favorites is, you only get one look at a bad trade. Yeah, that's it when you get in. I take that to mean you got to puke it and preserve capital. Well, no, a bad trade is what? You're on the wrong side of the order flow. So when are you going to take that off? It's your call. I mean, you have to allow some room in the market. You're not going to be perfect with your timing, but it has to be consistent. You know what I mean? Trader in the pits, he really liked to watch trade. Tom Baldwin in the bonds. Yeah, that was an artist right there. Tom Baldwin was an artist. What had the best pit traders in your experience? What pit had the best traders in your experience? Well, there's no way to answer that question. Nobody here probably has ever heard the name Charlie D. Anybody here heard of Charlie D? Soybean trader? Nope. Bing, there goes the bell. Soybeans are open. First thing you hear. How much for the crop? Buy every bit. Give it to me. People will be like, what the hell? And they're like, what does Charlie know? What does he not know? He would try to intimidate people into not selling. Because what happens if nobody sells? There's no orders going into the pit, so the bids carry the market higher. Why would he do that? Because he went home long the night before. You understand? Jorgen says, that was eye-opening wisdom. Thank you much. You're welcome. Hope to see you in my regularly scheduled occasional webinars. Any other comments or questions? I love doing these, guys. I got to tell you, I love doing these broadcasts for you because I know that there's somebody out there that's going to hear this. Now, I also get the hate mail, and I'm sure Sherry gets her fair share of it too, because, what I just said basically
Because I'm not
negates.
perfect.
Say that again?
I'm not perfect. Mhm.
Not perfect? No one is. No, of course not. No,
Yeah.
but I'm sure you get your share of hate mail from putting me on. A lot of people do.
Oh, no, not for putting you on.
Anyway, it's been a wonderful chance to be here. We still have a few minutes, guys, if you want. More than happy to assist you with some important questions. Feel free to ask them. I don't know when our next guy is due.
We have still got 6 minutes. So if you guys have any questions, now's the time to do it. If you've looked at the netwinningtrade.com, you may be able to ask questions. So now's the
You
time
can
to
always,
do it.
and that's another thing. On the website, there is a place for you to put a comment or question in if you're interested in learning more about what I do. Gene says, enjoyed your insight. Thank you. Margaret teaches us the wrong way on purpose. On purpose? Oh, okay. I don't know if I would agree with on purpose. I would say that's just the general nature of things. We have to learn it on purpose, maybe. Different way, maybe. Splitting hairs. 6 of one, half dozen the other. Christopher says, enjoyed reading Art of the Trade. Good book. What's your opinion on the yen at the moment? Okay, well, if it makes you feel any better, I had some wonderful sell signals from my personal strategic approach. In fact, I'll be happy to show you that real quick if you're interested. Let's see. There it is. Overnight, these are my sell signals overnight in the yen, and as you can see, we had a nice move. However, I had something to do outside of the house, outside of the home on Wednesday night, and I wasn't here to follow these last little bit of sell signals that were there at the end of the day. And as you can see, the buy signals that I took this morning didn't work at all. So Now I'd be a buyer. I'd be all over this market right now. So, in fact, as a matter of fact, let's take a look. I bet 120, 180, 240 daily. Oh, look at that. The daily came right to that average and held it. Nice big bid wick. Yeah, I'd be a buyer in the market now. But here's another thing about discipline is that, I hit my loss limit today because I was wrong at, two significant price points on the way down, and I missed the sell. Although my system said you need to sell, but I didn't take them. So what does that mean? Well, I missed an opportunity and I lost a little bit of money. So we're waiting for the next play. And right now, what I look for is congruency on multiple time frames. And as you can see, I didn't get that on multiple time frames. Although the sell side basically said just get short, stay short from the highs. On the weekly, absolutely some of the best sell signals I've had. I had some of those on. I was in Mexico when the short came on, and should I sell it up here or finish my tan? So that's another one I missed. So as you can see, I'm not the perfect trader yet.
Is there a perfect trader?
Not yet, no. But Christopher, I'm glad you enjoyed reading Art of the Trade. What did you like about it? What was the thing that resonated with you, if I can ask you? Maybe Chris can take a minute and just throw a thought out there. Have you read anything else? Have you read Trading Rules at Work, Psychology of Trading, Time Compression? Christopher says the market insights and the personal story together. Yeah, I tell you, that was the goal. The goal was to say that, look, this is about thinking and behaving a certain way, and it's a personal experience. So I wrote it from that point of view, that it's really a story about what it takes to win and what it takes to learn. And quite frankly, it was the first time I'd ever written that way. So I don't know if it came out all right, but I'm glad people like it. So Victor says, are you going to give away some of your course? Yeah, absolutely. Yeah, sure. I'm going to do that. 40 years of experience and knowledge. And I'm going to ask if you would just go ahead and let me give it to you for free. I'm going to do that. Sure. Absolutely. Absolutely. Are you crazy? Why would sorry, maybe I have the wrong attitude. Don't mean to, but no, I don't give away my knowledge and my insight. If you want it, we'll talk about it, and there's a price to be paid for that. And I think it's fair, and that's what it's all about, is making it fair. But you'll never learn anything unless it costs you something anyway. Christopher says the ticket and the Ferrari was good. Oh, well, yeah. It's interesting that you guessed it was a Ferrari, because actually it wasn't a Ferrari, it was a Lambo. But that's okay. That's okay. I'm still a big Ferrari fan. Because I didn't say what kind of car it was. Manasuka says, operate in a higher time frame. What time do you trade on? Okay, great question. If I can just take 2 seconds and answer that real quick before we head to the next broadcast. The time frame that the time frame that I choose to find signals on is the 60-minute time frame. I then look at the higher time frames above that for what I call congruency. In other words, we're looking for multiple time frames to say the same thing, if they can. Sometimes you'll get buy signals on 60-minute, sell signals on the 3-hour. So that trade has got a little bit of dissonance in it. It may not be the best trade. So better probability is when you get like a high print that offers a 60-minute sell signal. An hour later, the 120 has a sell signal. An hour later, the 3-hour has a sell signal. Those are usually very high probability trades. So I like to look for trades on the 1-hour time frame, but I use multiple time frames above the market to look for trades that are congruent. They're adding confidence to the trade. You see what I'm saying? Jeff says, laughing my ass off. Okay. Christopher says, sorry. Okay. Yeah, it was. Everybody assumes it was a Ferrari. I think that's because I talk about Ferraris at a lot of different things, and I've had my unfair share of Ferraris. But the really fun one, believe it or not, was the Lambo Gallardo. Was actually, that was fun. That was a fun ride, and I don't know what it was. It was just something different about it. I'd recommend it if you have the wherewithal. Now I drive a
Nice.
Jeep. Now I drive a Jeep because those days are over. So I don't want anybody to get the wrong impression. Mike says it's not easier to take a trend that is trading bigger time frame and buy or sell in lower. Not sure what you mean there, but taking a trend on a higher time frame requires more
Is it
discipline.
not easier?
Yeah, I think that's what he's saying. It takes more discipline to do it on a higher time frame than a lower time frame.
Yeah.
So I'm not saying it's good or bad. I'm saying, look, here the key. Let me just leave you with this, and then I'll let you go. Whatever you choose to do to try to figure out how to make money, there's an edge to it. There's a probability to it. You got to figure out what that probability is for you. And the only way you can do that is by executing that edge identically the same way for at least a reasonable sample set, which is about 100 trades, and then looking at the probabilities. If you think you have an edge, but the fact is you're only getting 32% winning trades out of 100 trades, there's something you need to improve. On the other hand, if you're getting 32% winning trades, but you can take $5 out for every dollar you give back on your losers because you just nailed it, then you want to stick with that. So I wouldn't have a problem with 70% losers at that point because you're making more money on your winners than you're giving back on your losers. So that might be a viable method. So one of the things that I educate people on is it doesn't matter what it is. There's no right or wrong way to do this. There's only things that lead closer to a consistent winning approach and things that'll take away from a consistent winning approach. Whatever your winning approach is, that's you. That's your edge. That's the thing that makes you unique. So work with that because your edge is you. You can enforce you. And what if you're smarter than all of us? What if you're smarter than all of us that we're sitting here talking about this? Have you ever considered that? What if you're really better than everybody sitting here and you just don't know that yet? So don't listen to somebody else's point of view. Listen to your own. Thank you for having me, and I
Have a
hope to
good
see you again
day.
sometime. Thanks, Sherry.
Thank you. You will.